Good afternoon. This is Ron Brown. It's Friday, the 24th of June, 2022. There's 12 minutes left in the market day. This is going to be my weekend report, which I've been doing on Friday afternoons to keep my weekends free. Here's my standard risk disclaimer. Any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you are not an HCSI user and you like what you see here, you should get a free 30-day trial. No credit card is required, and you'll also have access to the files that I show in this video. Just go to highgrowthstock.com. You can use this full URL or just go there. You'll see the link to the free trial. Okay, this is the market today. This is the NASDAQ composite. We don't have volume on this, but you can see that there was a gap up, filled this gap here because it gapped above it, and it looks like it's going to close near the high. This is a 78-minute chart, so you can see what happened during the day. Here's the opening gap, traded up, and then for most of the day, it traded below the high of the day, but now it is breaking out past this closing on a very high note, and this is was evidently ignited with a report from one of the Fed governors that said that inflation is going to be coming down soon, and it's not going to be that big a worry. Well, we'll see what happens. Anyway, as far as this goes, you can see my 3-day has crossed the 6-day, but even with that, with the trend down at this point, this is still a counter trend rally. If I go up here and add a drawing, a trend line, let's take it down here. Okay, you can see that this trend is still down. This is pretty much from the highest high at this point to the highest high before the lowest low, and that's how I like to draw a trend line. So the trend is still down, but boy, it looks good so far. What I don't like about today's rally is the lack of volume. Look at the volume here with, what do we have, 8 minutes to go now on the NYSE. That is pathetic volume. And here's the volume on the NASDAQ. It'll probably close above yesterday's, but it's really been light all day. Now look at this closing spurt into the close with the S&P, new high for the day, and the same thing for the NASDAQ. So there is volume coming in now. You can see it very clearly. So these numbers will probably look better by the end of the day. This tells me there's really a lot of buyers wanting to jump in, or there's a lot of shorts getting squeezed. We don't know, but this is painful for the shorts and great for the others. But look at this. This is interesting. Here's advancers versus decliners. This is just in the last 1 minute. Even though these futures are shooting up, the advancers have dropped down to 2091 from 2280. On the NYSE and on the NASDAQ, they were up at 1931, and they're down now to 1714. So these futures are a little bit misleading, I would say. But still, it's a very strong day, and that's encouraging after what we've been through. It's especially encouraging for those who just let their money sit in 401ks and IRAs and always assume the market's going to go up. We all know that it isn't, but I'm glad to see that we're getting this. Now, I'm going to get out of here, and I'm going into HCSI, and I'm in my major market ETFs, which you will find if you're using my files here under my market analysis user groups, down under user groups, market analysis user groups, major market ETFs, and then I click through to my I'm sorry, this folder right here. scorecard ETFs intraday. So I'm in my top-down process views for ETF, and then I'm on 1A, which is intraday, and you can see what's here. Now I'm going to sort on the raw combo. You can see the spider is at the top because it's based upon percentage price change and range. You can see the price change is 2.88, and look at the range, nearly at 100%. But this is what I'm talking about here. Look at the volume. On a day like today, on a 3% day, I would expect to see the volume heavier. And I'm going to bring up this daily intraday chart here, and there's the information right here, which is transferred from the warehouse to this. And look at the volume here compared to the 20, 50, and 90-day moving averages. But the range is almost at 100%. Once again, this is still a counter trend rally. Now, if you look down here, look at this volume bar compared to the others. I mean, this is it's a real anomaly, is what I would say. Now let's go to the Qs. Let's do the total market ETF. This is pretty representative of the broader market, the S&P, and you can see very strong candle on very light volume. Look at the numbers, down 30.5%, and you can see that down here too. And then here are the Qs. Light volume here. Look at that volume bar. I mean, this is really surprising. I'm going to update everything and make sure we have the latest. And okay, it just ticked down a little bit on the percentage range, but very close to the top. The S&P 500 is nearly at the top. It'll probably close there on light volume. Let's see where there is volume. Small cap portfolio is up 42%. Now look at this. You can see, I'll make this larger. You can see that it's above the 90-day moving average. Very strong move. But this has been battered, really battered. So this is encouraging. There is a VPA flag. Strength seen. I'm sorry, let me click on this again. Strength seen returning after a downtrend. Here's the confirmation today. An up bar closing near its high. This confirms return of strength. So we'll see if this carries through to the market next week. If this thing's going to go, I'd certainly like to see more volume. What else do we have here? What's at the top of the list other than this? Let's see how these ARK funds are doing. ARKK, it's been building momentum. You can see several days here. It's well off of its low, but if we put it in perspective by looking at a long-term chart, you can see that it's got an awful long way to go to regain some of this. Now, I put out a video today. It's a short video. I'm working on something. I'm going to change charts here very quickly. I'm in my contextual intrinsic charts, and I'm going to bring this chart up here. And if you watch the video on comparison to the S&P 500, this will make more sense to you. This blue line represents the comparison of any ETF stock or index to the S&P 500. When it's flat like this, it's trading with the S&P, even though the S&P was not doing much in this area here. You can see it's kind of flat, and ARK was trading along with it. When the S&P fell like this and the blue line goes down, that means that this ETF was underperforming the S&P 500. Even though they were both dropping like a rock, this ARK fund was dropping faster. Let me go in here so we can see this a little better. This was going down, and you know, they look pretty comparable, but because the blue line's going down, it means that ARK was relatively weaker than the index. Now look at this. So as the S&P 500 was settling in here, not doing much. You can see the blue line started to go up on this ARK fund, and that means it was outperforming the market. So money started flowing in here, and this blue line indicates that it's now outperforming the S&P 500. So this is something I'm working on now, and there's two charts here, candle chart and a bar chart for people that like bar charts, and you'll find these under my contextual charts, number 8 and number 9. Now I'm going to do an F5. Look at the time here. This was 3 minutes before it closed. These update automatically every 5 minutes, but you can see now it's 4:02. So these are the closing numbers. Let's just take a look here. The Q's closed at 97.36% of the daily range. The Spider closed at 95.59. So they backed off a little bit going into the close. What closed? That's Fidelity Magellan closed at 100% of the range. Russell 2000 closed at 100% of its daily range, up 3.64%. So looking at this chart, I'll just leave this chart up here, and you can see that when the S&P 500 was going down, so was the ETF for the Russell 2000. It was falling faster right here than the S&P. Put a crosshair on here. And then at this point, when the S&P 500 just kind of settled down, notice how this blue line went up. So this shows me when the the small caps turned up, pulled back a little bit, underperformed on this day, but on these 3 days here, you can see that this ETF is clearly outperforming the S&P 500, and that's represented up here in the percentage change intraday. Let's see what the percentage change was for the SPY. Just resorting it. It was up 3.14% compared to the Russell 3.64. So right here, 3.14 compared to 3.64, and that's why this blue line was rising again today, because the small caps are outperforming. And that's a good sign for the market if people are willing to take the risk of getting into small cap stocks. Now I want to point out that I've put this relative strength blue line in another chart too. If I can locate my quick pick. Up here in my undercut and rally charts, notice that chart number 10 says relative strength compared to the SPX. I don't have any EMAs in here, or exponential moving averages, because I didn't really want the distraction. Instead, the blue lines in here, the comparison, and also the undercut or the accumulation bars. The light green bars means an accumulation day either based upon either candlesticks or a VPA flag. So we had an accumulation day here. This was weaker. Well, it was right here. Let me put the crosshair on. So on this day, it was slightly stronger than the S&P. This day, when it gapped down, of course, it was weaker. But look here. Then we had an accumulation day. Strength seen returning after a downtrend. Another accumulation day based upon a white candle. Another accumulation day. And then you can see down here that the 3 was below the 6. I can tell that by looking at the histogram. I don't need the moving averages. And then this is the day that the 3 crossed over the 6, which was yesterday. And I'm doing the Russell 2000 here. So you can see there was good volume on this today. And the crossover was yesterday. Also, make note of the 3 volume pocket pivots. These are negative volume pocket pivots. They're really not pocket pivots, but they're based upon the same formula as the pocket pivots, except just in reverse. So distribution, and now we've had 3 accumulation days based upon heavier volume. This right here is yesterday's performance compared to the S&P, and after I update tonight, it'll give me the performance for today compared to the S&P. That is the S&P 500, I should say. So even without the S&P 500 being up in this chart, I don't have a split window. I can tell right here that this ETF is underperforming the S&P 500. Here it's outperforming up to this point, underperforming, outperforming, underperforming, outperforming, same as, essentially, underperforming, and then it's underperforming. It outperformed this day, underperformed, outperformed, underperformed by a little bit, and the past 3 days it looks like it's been outperforming the S&P. So I think these charts are going to be very helpful and valuable. Let me know what you think, and I'll be doing some more work in this area. Now IBD has a relative strength chart, or MarketSmith I should say, in their charts, and I'm not sure. I assume they're comparing it to the S&P. You can compare this to anything you want to. I'm just going to show you this quickly, but mine will be standardized on the S&P. If I can locate it. Here it is right here. And you can see that I've chosen the S&P. You can go to securities market indexes, or just go to the major market indexes. If I want to compare the Russell to the NASDAQ or any other index, I can just select one of these other indexes. But I'm going to leave it where it is compared to the SPX. That's pretty standard because it's a much broader picture than just using the composite, the NASDAQ composite. Before I leave this ETFs page, let's take a look at some of the other things in here. Let's see. Probably easier to sort on symbol. I want to see what oil did today. You can see it was up 2.8%. The energy stocks have been beaten down the past few weeks, and they all rallied today because oil was going up. I don't know how they held up or not. Here's gasoline, UGA. You can see that down slightly yesterday, but under accumulation today. We're not getting a break on gasoline yet. But there's a lot of information in this view. Different ETFs, you can get a feel for different market segments as well as the broader markets. Now also, if you want to just look at the spider sector ETFs in here, here's the SPY. You can see the materials, consumer, discretionary, communication, and so on. These sectors outperformed the S&P today. So the strength was in materials, consumer, discretionary, but they were all strong. Everything was up today. Just looking at this tells us that it was a very broad market rally because all of the sectors were up. Now let's do this from a different perspective in HGSI. I mean, we've got all kinds of options with this program. I'm going to go into the reference groups. I'm going to go into the industries and sectors. I'm going to go into the sectors by industry. I'm going to click through here, and then I have to change this. I want to go down to the top-down scorecard for HGSI index analysis. Now, These may not be the final numbers here, but all I have to do to get the final numbers is to click on the designer. Here I'm in sectors by industry. I select tools and rebuild indexes for groups. You can see they're rebuilding up here at the top. This rebuilds faster if I close the warehouse, but I wanted to show you what's happening. I'm taking that data from the stocks that were updated after the market closed, and I'm rebuilding these indexes, and we're going to get a feel for the strength. And like I said, if you take this warehouse off, this happens almost instantly. Why don't I do that just to show you? I'm going to close it, and I'm going to rebuild the indexes in the group. Now look how much faster this is going. It's going in and updating every one of these industry groups within these sectors. Almost done. And then I can click to the warehouse, bring it back up. And these are based upon the industry groups within these sectors. You can see the gains here. So within the materials index, where was the strength in there? It's easy. Just change to the index group, and we can see that the specialty chemicals index was where the strength was. This percentage price change one day represents today, even though it's an end of day column. Why? Because I rebuilt this group. Let's just look at the index. Look at that big move right here. Now, if I want to change to the industry group itself, these were yesterday's prices, but I just dropped down to number 6, or I'm sorry, yes, number 6, and it shows me these stocks, what they did today. And you can see there was a lot of strength there. And look where these closed. These all closed, or most of them closed in the upper range, or very near the top of their range. So going back and then up to the top, here's my special chemicals index, and I just showed you which ones moved up the most. Now, in addition to working from this level, I can go down here to my daily prospecting scans, click on scorecard, and use this instead. It's a little bit easier to do it here. So let's just go back to the sectors. Let's go down to the tech index, which is up 3.1% today. I'm going to change to the index group, and this shows me that payment and data processors were up the most, 5.1%. I'm going to change to the index groups. These are yesterday's prices, but I want today's, so I just drop down to the next view. This is what happened today. This stock led the way up 1%. I'm sorry, 7%. I was looking at the percentage pressure. And you can come in here and see it. Now I've got this same chart down here. Here is an accumulation day, a distribution day, accumulation. Accumulation, even though there's a negative VPA flag there, was a white candle. So this is green. Here's the crossover day. Continued, and it continued today. It's out of this 2-day window. That's why there's no green bar. Pocket pivot today, confirming the move up. Now, look at this. Look at the blue line. This stock has been outperforming the S&P going back to this low point. It's been going up every day. So if this is a stock that I had noticed, which I didn't, but it was under accumulation, and then here's the crossover, and here's an effort to rise follow-up, followed by a pocket pivot day. Let's just look at one more of these. I'm not familiar with, yeah, I guess I've heard of this one, but this one's a lot looser. Accumulation days. Even though it's a black candle, stopping volume, so it was a bullish VPA flag, and you can see what happened with this. I don't like the loose chart like that, like this. Let's look at one more. Affirm Holdings. Okay, this is better. You can see it was underperforming the S&P at this point, The group was kind of holding up okay here, but it got down here. It started performing with the S&P, and then it turned up here, and these are automatic trend lines on here, by the way, support and resistance lines. It turned up here and started outperforming the S&P on these accumulation days, and it really hasn't looked back. So we have all kinds of tools to work with. It's just whatever you like. But the top-down methodology in HGSI, you can do it here. It's pretty hard to duplicate this anywhere else. In fact, I don't think you can. But the insight we're getting just from looking at this to see where the sector strength is and then going top down. Let's do one more. Let's go to the energy. And midstream oil and gas was the biggest gainer today. Then you change to the industry group or the index group. This is yesterday. You can see where these index or where these energy stocks were yesterday. So we drop down and go to 1A to today, and you can see the turnaround. Big turnaround today. Let's bring up this stock, $10 stock here. You can see why it was red yesterday and today. A complete turnaround with a pocket pivot and an effort to rise. You can see what happened with these energy stocks the past few weeks. And then this one, this stock started holding up here. Had the one down day, but there were two bullish candles before this, and then this here. If oil continues to go up next week, this may be a stock to jump on.